You know that dream, right? Getting in on the ground floor of the next huge company, buying a stock for practically nothing and then watching it just explode? Well, that's the whole siren song of penny stocks. But is it a real opportunity to get rich, or is it just a really dangerous trap? Let's get into it.
The pull of getting rich quick is, let's be honest, really strong. But you've got to listen to the warnings. Our source material puts it bluntly: pinning your hopes on these things could literally leave you penniless. So let's dig into why that warning is so important.
So yeah, what's the dream versus the reality here? The dream is, turning a tiny investment into a massive payday. But the reality? The reality is often a world of extreme risk, shady dealings, and potential scams. Knowing the difference between the two is everything.
Okay, before we dive into all the risks, let's just make sure we're on the same page. What actually is a penny stock?
So officially, the SEC says it's a security that trades for less than $5 a share. But honestly, the most important part of that definition is where they trade. You're not going to find these on the big boards like the New York Stock Exchange or the NASDAQ. Nope. They trade on what are called over-the-counter markets, which basically means they get to skip a lot of the strict rules and financial reporting that bigger companies have to follow.
Now, you might hear people use the term microcap and think it's the same thing. It's not. Penny stock is all about the price of one share, under $5. Microcap, on the other hand, is about the company's total value, its market capitalization. A company can be both, for sure, but the terms are measuring two totally different things.
All right, so now we know what they are, let's get to the real meat of this, the 4 biggest risks. And trust me, this is the stuff you absolutely have to understand.
There are 4 major ones, 4 big red flags we're going to walk through right now. Risk number 1 is a big one. You're basically flying blind. See, companies on the big exchanges have to file these super detailed reports with the SEC all the time. But a lot of penny stock companies, they don't have to do that. That means you're trying to make a decision with almost no reliable info. And the info you do find could be coming from, well, anywhere. Okay, risk number 2. There are no minimum standards. Think of the NASDAQ like a club with a tough bouncer. Companies have to prove they're financially healthy to even get in. That's a huge layer of protection for you, the investor. But the markets where penny stocks trade, sometimes there's no bouncer at all. In fact, some of these companies are only there because they got kicked out of the main club for failing to meet those standards.
Third, you've got little to no history to go on. A ton of these are either brand new companies with 0 track record, or, and this is just as bad, they're companies that are circling the drain and about to go bankrupt. Either way, you're trying to guess the future with absolutely no help from the past. And the 4th huge risk is something called low liquidity. This is a massive problem. It means that not a lot of people are trading the stock. So when you decide you want to sell, well, good luck. You might not find a buyer at all. And this quiet, empty market, it's the perfect playground for scammers and manipulators.
And the most infamous scam of them all is the pump and dump. It's classic. Fraudsters quietly buy up a ton of a super cheap stock. Then they create a storm of fake hype, spam emails, social media posts, you name it. That's the pump. As all these new, unsuspecting investors rush in, the price shoots up, and right at the very peak, the scammers sell everything they own. That's the dump, and walk away with a huge profit, while the stock price collapses and everyone else is left holding the bag.
Now, these scams work so well because they tap into a couple of really powerful myths that suck people in. So let's just bust the 2 biggest, most common sales pitches for penny stocks right now.
So here's myth number 1. You've probably heard it. Hey, giants like Microsoft and Walmart, they all started as penny stocks. You just have to find the next one. It's a great story, right? But is it actually true? Let's look at the facts. When Microsoft first went public, its IPO price was $21. Walmart was over $16. So where are people getting these single-digit cent figures from? They're looking at a number that's been adjusted for decades of stock splits. A stock split is just when a company divides its existing shares into multiple new ones to keep the price down. So that 8-cent price from Microsoft? That's a historical calculation, an illusion. It is not what you could have ever actually paid. These companies were never, ever penny stocks.
All right, myth number 2 is all about the seductive math. The thinking goes, wow, if I buy a stock for 10 cents and it just goes up by 5 cents, that's a 50% return, and I can own thousands of them. It sounds amazing, but it's a dangerously one-sided way of looking at it.
Because here's the other side of that coin.
the one they never tell you about. A stock that can jump 50% in a day can just as easily and just as quickly lose 50%. That 5-cent swing is a brutal two-way street. People get so hypnotized by the potential gains that they totally forget that the potential losses are just as big and, frankly, a lot more likely.
So, when you put it all together, the lack of good information, the wild price swings, the constant threat of scams, you really have to ask yourself a pretty fundamental question.
Now, look, are there some legitimate small companies that start out this way? Yes. But finding those needles in a giant haystack of scams and failures is incredibly difficult, which is why these are just way too high risk for most investors. It's just not a game most people should be playing. If you are absolutely determined to go down this road, you have to treat it with extreme seriousness. This isn't just a casual bet. You have to do insane amounts of research, dig into the company, scrutinize their financials, and even check out the company that's auditing their books to make sure they're legitimate. So in the end, it all boils down to this one question. Are you looking for an investment, or are you just buying a lottery ticket? Because an investment is based on solid research and a company's real value. A lottery ticket, that's based on hope. And before you ever buy a penny stock, you need to be really honest with yourself about which one you're actually after.